If you've ever wondered how professional traders spot the perfect gold trades before the market moved, this video is for you. Today I'm breaking down how to identify fair value gaps that can give you an edge and help you catch high probability setups. Watch closely because missing this could cost you. Alright. So in my previous video I go more in depth on fair value gaps. This video is solely showing you how I call fair value gaps on gold and how to trade fair value gaps on gold. Okay, so first and foremost, I'm on the 4-hour chart right now, and what I do first, I'm gonna show you guys how to do it in a bearish trend and a bullish trend. So in this situation, this is a bullish trend, and I'm gonna show you guys how to do it on this. So for example, right now, for those of you who already know how to trade, you already, from seeing this right here, this is a bullish trend. Let me just put a rectangle on here so we can just focus on this right here. Okay, so let's just focus on what's in the box, right? So off of it, you can tell this is a bullish trend. How do we know? Because if you know market structure, you can know that this right here would be a lower low, a higher low, and once it breaks this high over here and forms a higher high, it goes back down, forms a lower low, a higher low, and then goes back up and forms a higher high, then forms a higher low here, and it just keeps breaking these highs to form higher highs, then higher lows, higher highs, higher lows. That's considered a bullish trend. So what I do first is I check what time we're in right now. So if it's 8 a.m. Eastern, so the only times I really trade gold is in the morning. So normally around 8 a.m. Eastern Standard Time to 11 a.m. Eastern. That's where I found to have the best setups. Alright, so we basically go towards this time and we try to look for fair value gaps when 8 a.m. Eastern happens, right? So first and foremost, okay, let's say this is 9 o'clock, right? We see the uptrend. We see it as an uptrend on Thursday at 9 a.m., right? 9 a.m. We see a fair value gap here, but if you know fair value gaps, it's 3 candles, 1, 2, 3, and it's the gap between those, the first and the third candle. The first and the third candle is the gap between the first and the third candle. As you can see, this one was invalidated and it just tanked, right? At let's see, 9 a.m. we can't really use this at all. So we wait. Once it breaks up here, it forms another low. We can look for another entry. Let me see, is there any fair value gaps here? No. Right? There's no fair value gaps here, so we wouldn't really trade that. But we can see that there's a huge push to the upside at 9 a.m. over here, right? So what we could do is we can form 1, 2, 3. We can do this, stretch it out, right? And what do we see? See, that price did break up, but then came back down here, right? So if you wanted to, after this 9 o'clock push and then price came back down here, you could enter. Right, you could go for, let me see, put the stop loss below the first point. We could go for 101, 102, 105, all the way up to this high over here. This high up here, right? So you could do that. So we could look for another fair value gap. Look, 9 o'clock here, another fair value gap formed. Let me see if I could zoom in. As you can see right here, if you had entered here, you would be good. Once another push came up here, what is this? Another fair value gap right here. Remember, it's 3 candles. So the first one here, second here, third here, and it's the from the wick here of the first candle to the wick of the third candle up here. Then you stretch out the rectangle, and you wait for price to come back in here, which is around another 9 o'clock in the morning. The next day, 9, 10 o'clock again, you could enter again. Stop loss will be below the first candle that started the fair value gap, which is this first candle right here. You can have the stop loss below it. Okay. And same thing like before, you could go for a 101. In this situation, this was a 104, 108, 106, 107. Back to this high. And you just basically keep doing that at that specific time. Like this one, I would have entered around 9 o'clock, 10 o'clock on Friday and held. In this situation, since it came back down here, the best you could have had was like 101. Yo, but your stop loss would have never been hit because it would have been below the first candle. This is the first candle, this is the second candle, so the stop loss would have been below this candle right here. So your stop loss would have never got hit, and you would have held up. Another time, this is another fair value gap. You basically just following the trend up. You know, that's the best how fair value guys work, when you're following a trend and when it's around 9 o'clock in the morning to 11 o'clock Eastern time, standard time. So in this situation, look, 9 o'clock again, it did it again. It does it like every day around the same time, honestly. You can see this is like what, 9 a.m. So 9 a.m. Eastern. So you could go this candle right here, 1, this candle 2, this candle 3. So you could just take a rectangle right here, stretch it out, and then literally just have another, entry, wait for price to come back down. If you wanted to wait till Monday, 10 o'clock. See, 9 o'clock again, it decided to go on Tuesday, 9 o'clock, decided to do the same thing again. You could have your stop loss here. Even if you decided to enter here, your stop loss down here, your stop loss would have never been hit. Because remember, this is the first candle right here. If you had the stop loss below that, you still would have never been hit. You know, so your entry would have been around here at 9 o'clock the next day. 9 o'clock on Tuesday. See, 9 o'clock on Tuesday. If you waited and entered stop loss down here, you would have went for 101. Honestly, you would have kept holding. It went to 1 or 2, 1 or 3. you know, that's a 1 or 2. We could do the same thing the next day. Just look for another fair value gap. As you can see, there's really no fair value gaps here for me to use. There's one here, but as you can see, it got invalidated and went back down. So you would probably got taken out here. And on top of that, it's not around the time. Look, it formed around 1400. That's like 2 o'clock in the afternoon. So you wouldn't have even bothered to even enter this fair value gap. See, if it formed at 10 a.m., but everything else is around next day. So it really wouldn't be a valid fair value gap, right? So again, no fair value gaps here. There's one here, but this is going down, so you wouldn't even use that. Waiting. No fair value gaps. Can't use these. This is not considered fair value gaps as the third and the first wick they touch. Can't use that. Can't use this. Still going down. Just looking for fair value gaps. Look, no fair value gaps to be used. So you would have saved yourself money instead of spending money. This right here would have been another good fair value gap to use. It's a small one right here. Let me show you guys. But look, it formed around 9 o'clock too. So right there, if you can see closely, another fair value gap, 1, 2, 3. Look at the time that it formed, 9 a.m. We waited the next day on, this was Wednesday it formed. If we waited for it to come back to this fair value gap on Thursday, you would have had another entry. Stop loss would have been below the first one. Look, it never got hit. Would have been below the first candle. Never got hit. And boom. You would have went for 1 or 2, 1 or 1, 1 or 3, 1 or 4, 1 or 5 before price decided to go and take you out again. So this is how you use fair value gap. You have to do it around 8 a.m. to 11 a.m. Eastern time. And that's how you really catch it. Another way to look for it is let's look for a downtrend move, right? Where price is just going downhill. Alright, we could use, honestly, let's use this small one right here. Okay, so how do we know this is a downtrend? Yeah, I'm on the 4-hour right now. You can also go on a lower time frame and do this. It happens on every time frame. So again, how do you know that this is a downtrend? Take the pen, boom. For more advanced traders, you can automatically look at this and say, yeah, this is a downtrend. For those of you who are new to identifying them, it's the low. Excuse me, is the high low. The high low that took out, let's say, this low, this higher low. Excuse me, this higher low took out this lower high. So and formed this lower low. Then it came back up to this higher low. And then it came back down, formed another low, higher low, right? So that's how we know it's I can actually, to help out those who are new. So this is the higher low here. This was the low, lower low, lower high, lower high. So this little lower high took out this higher low here, forming this lower low. Then it started making lower highs. And then this would be a lower low too. So now, that just shows that this is a downtrend. Okay, because it keeps going down. Like the lower highs just keep taking out the lower lows, right? So in this situation, all you gotta do, right, once you identify that it's going low, is simply start looking for fair value gaps. Doing what? Doing 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time, right? So what is this? A fair value gap, right? Right? There's a fair value gap here. Once it broke down and formed this lower low, there's a fair value gap that was here. You could go ahead and make a fair value gap. Lead 1, 2, 3. So right here, stretch that out, right? Remember, we're only entering though, right? Once it formed this lower low, and it formed this lower high right here, right? What this lower high took out this higher low and formed this lower low, then came back up here. There's a fair value gap here, right? But when are we entering? Between 8 a.m. Eastern Standard Time to 11 a.m. So look, what time did it come back up here? Look at it, 10 a.m., right? So you would enter the sell, right? You would enter the sell. Stop loss, you could have the stop loss up here, or you could have it a little tighter right here. And you could go for a 101, 1 or 2, 1 or 2. It's like a 1 or 2 trade, right? And that right there would have been like 80 points on gold, just like that, right? It's like a Monday, Tuesday, Wednesday. This would be literally a 3-day trade, right? So you would have entered around Monday. You would have held all the way to Thursday, Friday. This would have been Thursday. So this would have been a nice little swing. This would have been a nice little swing. And yeah, that would have been a nice little bearish trend entry. If you want to talk, I'll show you guys another entry. Same thing here. This right here, what is this? A downtrend, since it's going down. This right here would have been a downtrend, because the higher lows just keep taking, the lower highs just keep taking out the lower lows. So you would just keep entering during those specific times that I told you. So notice how this is a downtrend, because the lower high just keep taking out the lower lows. See, this lower high took out this lower low and formed this lower high, you know. Show you guys again. Lower high took out this lower low, formed this lower high, this lower low, excuse me. Formed this lower low. Then formed another lower high. No, it just kept going downhill. Alright, so again, you're looking for entries on 8 a.m. Eastern Standard Time. So 11 a.m. Eastern Standard Time, right? So let's look for it. Okay. Once this breaks down, you could have entered right around this fair value gap here around 9 o'clock. If you look closely, What is this? 1, 2, 3. At what time? 9 a.m. Eastern Standard Time. Formed it, the fair value gap around this fair value gap around 9 a.m. You would have to wait for it to get back up there. When did it get back up there? Around 9 a.m. again. You would have had another entry. It does this every time around the same time, honestly. It's just textbook stuff. You could go for 1 to 3, 1 to 4, 1 to 5. This one up to 1 to 7, 1 to 5. If you just wanted to be in the trade for a day, you know. There's one Monday. Oh, it was there for Monday, Tuesday before price hit it. But you could have been out of there by, honestly, Monday right here, you know. You could have been good for the week, or if you wanted to look for another trade, since you already know it's a downtrend that's happening, you could wait for another perfectly good fair value gap. So, for example, what's this? Another fair value gap at what time? 9 o'clock. Same old thing. So you could have put another rectangle here. Look, 1, 2, 3. Fair value gap went into the fair value gap at what time? What time? In this situation, it did it around 5 a.m. So you really wouldn't enter it. But as experience, when you get more experience, you can see it. As long as the thing goes into, as long as the candle goes back into the fair value gap, you could enter it. But in this situation, just to follow our rules, since it's not 8 a.m., we wouldn't enter this. So we'd ignore this. Wait for another fair value gap to form. This is consolidating, ranging. So we wouldn't really touch anything. This formed around 6 a.m. You can use this fair value gap here for this. But again, this happened at 6 a.m. So we wouldn't even trade this. We'll just wait for another entry. We'll just wait for another entry. No point of rushing. In this situation, a fair value got formed here around 1 a.m. And what time did it go back up in the 9 a.m.? So yeah, you could have entered this. See, it always does it. There's no point of rushing. The best thing to do is to just wait your time. Like, look, so this is the first candle, this is the second candle, the third candle. Right? It happened around 1 a.m. We're waiting, we're not entering, waiting for price to get into it. When did the price get into it? Around 9 a.m. here. This long wick is 9 a.m. It went up here. Alright, we would have entered this entry since that was 9 a.m. There's no point to rush. Price always does this. Our stop loss goes above the first candle of the fair value gap that we used. We could have went from 1 to 2, 1 to 3, 1 to 4. This whole thing would have been wonderful. You know, if you wanted to, you could look for another fair value gap if you was bold. You know, like this is a fair value gap right here. But what time? 10 o'clock, 10 a.m. You're waiting for price to get back in there. Price never went back in here. So you wouldn't even enter this. Notice how I'm going to draw this fair value gap right here. Notice how price never went back into it. So we wouldn't enter it. It wouldn't be a good trade. Yep. So we'll just wait. See if we can get another entry. So for no entries. Honestly, you could enter this fair value gap here, but again, no point. No point. Because even when price went back up here, price went back up into this fair value gap here. I'll draw the fair value gap so you guys can see it. This right here, 1, 2, 3, is a fair value gap, right? Let me zoom in so you guys can see it. This right here is a fair value gap because there's a gap, right? Right? Yeah, you could wait. You could wait for price to come back in it, but guess what? This, when it went up there, is what time? 5 a.m. Eastern Standard Time. So you wouldn't even enter this for real if you was following the rules. But like I said, the more experience you got, the more you could tell what's gonna happen. But just for the sake of the rules, I wouldn't even enter this. I just let it rock. So Price really never give another good entry. This is another fair value gap here. It's tiny, but again, you wouldn't enter this because price never gave away. See, it's a tiny little fair value gap. Actually, you could use this, but again, it's not good enough. I would just leave it alone. I would just probably like leave it alone. So price really never gave another entry before it started going back up, right? But guess how many entries you would have had from this trade alone? You would have had 1, 2 trades, right? This one would have been 193 points. This one up here would have been 64 points. Okay, so over 200 points just on this downtrend trade, you know, and those are 2 good entries. So that's it. I'll make more videos so you guys could see more examples. If you wanted to check out my other videos as well to get an idea of fair value gaps, the link is going to be in the bio, and this is also going to be added to the playlist as well. Guys, see you guys in the next video.